Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I'm ripping through the comments section. I like to answer a lot of your guys' questions. Again, this is just my financial opinion. Don't take it as advice. So I'm gonna read some and answer some of your questions. It says, Andy, how do you get these gains taken the first step? The Dow to gold ratio. Gold is so often manipulated, just like last year with all the money printing chaos, the world stopped. And gold went $200 past its high of 10 years ago and came back down. It doesn't seem like gold will be allowed to skyrocket. People were calling for 3K, 5K, 10K gold in 2011, but it never got anywhere near those numbers. So I'm going to talk about that first problem. So the way that I view it, and it ties with the thesis of the channel. So I invested in that bull run in precious metals, in physical metals as well, from 2009 and onward. And this was the missing link. And this is what basically pushed me to figure out the thesis of this channel. And what drives gold higher? And in my opinion, it is not. So first off, I'll back up here in 1 second here. Take away all of the narratives that people have told you, all of it. Oh, gold's good for a black swan event. Gold's good in a deflation. Gold's good. Take that all away. All right, just ball it up, throw it in the garbage for a second. All right. What I noticed in history and all of major gold advances is because of one thing: an increase in M2 money supply, which resulted in inflation. The inflation aspect of it, which is delayed 1 or 2 years behind the M2 money supply, is what drives gold higher. Now, it only goes higher and accounts for the money supply under certain market conditions. Those market conditions are increased inflation rates with increasing interest rates. So higher than normal inflation rates with increasing interest rate environment. Because what it does is it drives the increase in the interest rates, drive people out of bonds and stocks, and it goes somewhere else. Because they don't want to lose money in bonds because you're going to have a real negative rate. And the interest rate going up is going to put pressure on stocks on how they're valued. And if the dividends are super low, which we are today, when that interest rate goes above the dividends, nobody's going to want to buy them. It'll be a real negative rate on the dividend yield of the S&P 500. So people direct their money somewhere else. In that scenario, it ties to an expansionary phase of real estate. And in that scenario, an expansion phase of real estate is tied to demographics. So you need all those things to kind of line up. The demographics do support with the millennials coming into home buying years, which is a larger population than the cohort before it. And I don't think the baby boomers will impact it. Again, that's my opinion, though. That's not a fact. It's just my opinion. It's a fact that the millennials are bigger population-wise, but it's not a fact that I think that we're just going to freely move up in the real estate market. I think it will. It doesn't mean it will manifest itself in whatever I think. So be careful there. So the reason gold didn't go and skyrocket was we were in a recovery phase of real estate. Real estate did not support the market conditions in order for gold to go higher. But gold could go up massively and account for all those things, given a lot of the charts that you've probably already seen on the channel. So it says the next problem: if the stock market crashes, uranium stock have shown multiple times in the past 2 years or so that they are not all immune to broad market crashes. So they will get blasted down as well. And I think you're completely right with that perspective with a short market crash like COVID or a real estate market. A real estate market can blast these things as well. But the structural underlying fundamental conditions for uranium to go higher are all there. A crash, if there is one, and I don't think there's going to be one, but if there is one, it will be temporary. So that's the way that I view it. it's a temporary pullback, which gives you a buying opportunity to buy, because the fundamentals are going to push this all higher. The way that the fundamentals would change structurally is if there were something in the housing market that would cause the housing market to crash. That is what I would be looking at. Everything else is like just noise. It's the real estate market. If that real estate market drops, then you got to worry. That's when you're going to have your big blowout crash of everything. But if the real estate market's in an expansion phase and we continue to buy or continue to build more new homes, more housing starts, we're in an expansionary phase then, and everything is game on, in my opinion. Here's one. It is, okay, thanks, Andy. It's a job to know what uranium companies will do the business over this bull run. I want to say overweight 5 companies, but it's a job to know for sure what ones are the best bets. Annoying, but is what it is. What's your thoughts? So my opinion here is there's an art to all of this. There's an art to knowing where to be, and knowing the sector, and that I think is the easiest portion. The art in it, or the tough portion of it, is to know what sector to be in, and on top of it, to know what companies to be in for the highest returns. And that's why I buy so many and spread my money out, because I don't necessarily know what will be the best companies and the highest returners. Because you can take really bad companies that, not bad companies, they could be good companies, but they're high cost producers. That's the right wording. They could be high cost producers and they're not performing well at the moment. But when the price of uranium goes up, their multiples on their earnings per share would increase more than, say, a very low cost producer. So a low cost producer could be performing very well in the beginning of a uranium bull market, where a high cost producer could come in and just absolutely go vertical. So it's very difficult to speculate on which ones are going to be the best ones. You can look at warrants, outstanding warrants. You can look at all those things where perhaps there would be share dilution or something in the future. You could look at that stuff. But if I were to give, and guys, this is definitely not advice. I don't want to be giving advice, and it's not. But in my opinion, the ones that I would look at, I like Encore Energy. I like Bannerman. I like Forces Metals. I like Deep Yellow. And notice I'm naming all these Namibia ones. I do like those. I do like Global Atomic. In Canada, I like Next Gen Energy. And then there's Explorers, but the Explorers don't have anything. So I can't, I do like base load, but that's an Explorer. You could take these Explorers and like really just sprinkle money all over them. Just a teeny bit. And that's what I've done. Just in case they hit something big. Because you don't need that much money in there if it goes up 100 times your money or more. I think that's probably the ones that I like. I don't have, hopefully I mentioned Encore Energy. I don't have a lot of like UU. I don't have a lot of UEC. I do like Uranium Royalty, UROY. I like that one as well. I don't own CCJ. I don't own Kazatomprom. They're probably good to own, but I just think if I'm going to swing for the fences, I'm swinging for the fences. That's just what I do with my speculative money. My other money, I'm just buying physical metals with, physical platinum and silver. But that's again, guys, this isn't my advice. Do your own due diligence. Make sure it fits within your investing strategy. And that goes for everything I put on this channel. Everything I put on this channel, you're going to have to look at it for yourself and make sure that whatever decisions you make are right for you. A lot of the stocks that I talk about on this channel are highly volatile. Doesn't mean they're extremely risky per se right at the moment, but They are highly volatile. They're going to move all over the place. And that's how we get our gains. And again, this is a small portion of my portfolio being allocated to each one of these highly volatile, more risky companies. It's a 20% of my entire net worth is in individual stocks that are of this type of volatility and risk. So 20% of my net worth. I am controlling my risk by portfolio allocation size. And I invest in each company maybe 0.5% to 5% is the range. I don't really go much over 5%. I will let it get bigger. I have a company that's far bigger than, I overweighted one of the companies, SM Energy, and it's far bigger than 5% now. And I'm letting it ride. And I've been buying into, Centennial Development. Those are oil companies. But uranium, I'm continuing to cost average in the names that I just showed or mentioned here. But guys, just be responsible for your own picks. I don't want to push you into anything, and it's not meant to be that way. This is just an education channel, but I'll give you, that's my opinion on it. And I could be wrong. There's that art of selecting companies and finding the really good companies is difficult. And I own a little bit of everything. I own Laramide, I own Goviax, I own Fission, I own Canalaska, Sky Harbor, I own UEX Corporation, I own Azincourt, I own Fission 3.0. I own like everything. I have a little bit in everything. So that's my take on it. It says the conditions for uranium to explode have never been better given the long downward trend. Its relative cheap value to gold, government's pouring trillions into clean renewable energy. I'm still dollar cost averaging in. That is one way to also mitigate your risk is by dollar cost averaging in. If you put it all in one shot, then it's highly dependent on when you bought. And some people get discouraged when they buy something at the wrong time, or it's still moving all over the place in a highly volatile company. It pulls back on them. They're down 20, 30%, and then they get discouraged. It's not necessarily any problem with you. It's not any problem with the valuation. It's just these things are so volatile that it happens to me all the time. It's going to happen to everyone. Anyone who goes into these sectors that are highly volatile, a 20, 30, 40% decline is basically normal. And the way that I mitigate it and the way that I look at it is I cost average in. So I continue to buy it when it comes down, bottoms and starts to come back up. I buy into strength and I continue to cost average in, and I use portfolio allocation to mitigate risk. So that's how I do it. Now, some of these companies may not respond to the big move in uranium. I mean, so think about that for a second. If you guys are trying to pick one or two or three companies and you pile all your money into it, and what if it doesn't work? What if it doesn't follow the price of uranium? What if they have a problem? What if their mine gets nationalized or deposit or however you want to call it? What if there's problems in a certain country? That's why I'm spread out. And I'm thinking, I overweighted what I thought was the best companies. So that's what I'm doing. And then I bought a whole bunch of everything. All you need is a couple of these to go. You're not in an exploration. So this is a betting strategy. All right. So think of it as like a statistical probability outcome, right? So I put $1,000 in 10 different stocks. So I have a probability. Let's say there's only 10 explorers in Canada. And this is basically my strategy. If you guys want to know, let's say there's 10 companies in Canada, maybe there's a little less, and they're all exploration companies. You got Pure Point, you got Standard Uranium, Base Load, you can go on and on and on. You got all these ones, and you rather than trying to figure out which one's the best, and betting on just one, I bought all of them. And I said, okay, let's. I'm just going to make up numbers here. Okay, $1,000 in each. So that's $10,000 that hypothetically I put into all of these different exploration companies. Let's say I lose on half of them. Half of them do not turn out and the $5,000 that I put in that half, let's just say it doesn't go anywhere. It doesn't do anything. Maybe it goes down 50%. So I'm down to $2,500 on that. But let's just say we got just one, that hit it big. And they hit it so massively that it returned 50 times your money. Well, if it's 50 times your money, you have $50,000. You had $10,000 in the entire investment. And let's say another one hits it, and it hits it pretty good. I get a 20x. So now I've got $70,000 in two companies from a $10,000 investment. That's worth it. And there could be ones that return like massively, like 500 times your money. Maybe. I don't know. But if one of them does, and it's in that big pool that you spread out on, then you win. And it doesn't matter what the other companies do. So it's not about having all your companies win. It's about having one of them win massively. And that's the strategy that you could deploy, and the one that I deployed in that particular case, if I think uranium is going to be as big as it is. And guys, there's a chance that uranium doesn't. Something might happen to the whole sector of uranium. So don't put all your chips in one spot, in my opinion. I spread it out. I've got, copper, natural gas and oil, uranium, platinum, on and on and on and on, gold and silver miners. I'm spreading it out. It says, I was looking at CCJ going back to 1996 on my TradingView account just a couple hours ago. It looks really good. The same pre-2007 patterns are showing now, and it looks like we are definitely stepping into or already on the launch pad. I'm having trouble sleeping at night. I'm so excited. I have shares in copper miners, platinum, gold, and silver miners, nickel miners, rare earth miners, and developers, potash and phosphate producers, and developers, and a Canadian junior oil producer. But far and away, my largest holding is in Bannerman, with Vimy a close runner-up. It's going to be epic if it plays out like I think it might. Yes. And the patterns are very similar. And the cool thing is that you're learning from, hopefully, the channel to look at those patterns because they repeat over time. And the prelude to the big move, it seems like they're all doing it. Now, this is what's even more crazy, is I've been looking at this stuff for a long time, and I always see these patterns repeat. It's like something that once you recognize them, you can't get them out of your head. It sits in there, and you get to see them over and over and over again. It's the herd mentality between humans interacting with each other. It's a psychological painting that is painted on these charts. And what's great about chart reading is it's the raw data. There's nothing that's manipulating it. There's no narrative. There's no some person thinking that this is the reason why. It is the raw data. It is the raw interactions between people. And obviously, the pattern may or may not repeat the same way. We're hoping it is, because we've got the valuations behind us, the wind at our back in terms of market conditions, and everything's pretty much aligned. So that's the positive thing here. And that's why I'm looking at it from that paradigm, from that perspective. I'm looking at everything from this huge slant that this could potentially go higher because of the valuations and the market conditions and expansionary phase of real estate, so on and so on. Now, the thing with uranium and the way that I've positioned is I've got a lot spread out. I'm hoping that I can win massively in a few. I'm not looking to win in everything. I'm looking to win massively in a few. And hopefully I chose the ones correctly that are going to be overweight. Now, a lot of people, they've overweighted ones that I don't have a lot of money in. Like, I have money in UEC, it's just not much. it's just not much. And I don't have much in like DNN, Denison Mines. And remember, I got like 6 accounts, and some of these I have money in there, and I don't add anything into it, so I don't really go in it. So sometimes I forget I even own companies. I go in there, I'm like, oh yeah, I do own that. So hopefully it works out for everyone on this channel. I really hope that's the case, and I want you guys to be successful. Honestly, that's why I started this website, or channel, I should say. It says, my wife wanted me to comment. She pointed out to me that you work full-time, research the markets, make a ton of content every day for us noobs to watch, work on cars, race cars, spend as much time outside as possible, and you have children. She also pointed out that you must have an amazing wife. I agree with my wife. You must have amazing one as well. Thanks as always, Andy. So yeah, I do have a great wife. She's amazing. And I do have kids and I play with them all the time. I'm going in and out. And the cool thing that's with all of this content that I can do this off the top of my head. I know this stuff inside and out, and I like doing it. I've researched this stuff for literally many hours in my 20s and even in my 30s. Many, many hours. We're talking PhD style. Like I dove into this, I figured it all out. Now it's just, I see things, get an idea of a video, and then create the video. So that's how I can do this stuff so quickly, because it's all off the top of my head. It's like, oh yeah, we could tie this into with this chart, and then I just start overlaying things, and that's how my brain works. It just flies. And in terms of like working out and doing all that stuff, I knock it out, man. It's just like boom, 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 boom. Go make food, clean the dishes, work out. I mean, it is like literally all day, every day. And that's okay, because I mean, that's kind of, I feel like I'm living. And doing this may be a possibility or an out to me working full time, because right now I'm the only person who makes any income. And I'm trying to make more money so I can invest more. And I'm trying to help everyone out while doing it. It's a win-win. It's win for everybody. I've learned this stuff over all the years, and what am I going to do? Keep it in myself and die? And if you guys are willing to listen to it and want to learn this stuff, I think everyone here is capable of learning it. And I think with this setup that's coming, and hopefully it pans out the way that we want it to, it's going to make a lot of money for a lot of people. And it's going to be good for me, because that's going to make me feel like I did something positive in everyone's life. And that's a good thing. Hopefully I impact everyone in a positive way. And hopefully it helps them out, financially. Fingers crossed. Says, I honestly think a lot of people just watch this because we like to hear what you have to say and to learn a little. If we come near that chart that I put up, I may have to come down. So the chart may not be the same. The launch may not be the same as Ethereum. It's the consolidation pattern and where we are in that consolidation pattern. And hopefully this launch is like that. Fingers crossed. Nothing is for sure. It's all statistical probabilities. And with where the valuations are, I'm very excited. I can't say this is a for sure outcome. So you have to put your bets down on the table like it's not a for sure outcome. That's why I'm still diversified. That's why I have my royalty companies, my physical metals. I'm still not 100% in one thing. I'm still acting like it could not happen, even though everything is aligned. So I know there's a lot of people out there that are very excited, but always keep in mind that it may not turn out the way you want it to turn out. And there's been things that haven't turned out the way that I wanted to turn out, but I also didn't know as much as I do today. So fingers crossed. So I, for one, expect FOMO to set in once the Sprott Uranium Trust continues to raise the spot price as it has for the last weeks. I will add that I can follow the following month to my 19 stock uranium basket, almost locked and loaded now. I'm locked and loaded. I'm just getting greedy at this point. I have everything I want. Now I just want more of it. That's where I'm at. And same with the ones. If you guys want to know the ones that I really like, I like SM Energy. So SM's the ticker. I like CDEV. I like Nova Royalty, but that's a really long-term play. That's not this short-term stuff. That's a long-term investment. And there's many reasons I like Nova. I like Uranium Royalty Corporation from a long-term perspective. Very long-term. Now, the short-term stuff, I think oil is going to kill it. And uranium, I already told you kind of the ones that I liked already in Namibia. A lot of them. And Encore Energy, I like that one. And Baseload. Go, James. Come on, James. You can find something big. And then I'm trying to think. Solar companies. Some of those solar companies could be crazy. The ones that I think that they're so speculative, and I don't know as much about solar. I'm reluctant to tell you any of those companies because Sun SUNW, and this could turn out badly, guys, because I don't know as much about the solar area. SUNW seems pretty crazy. Fuel Cell FCEL looks crazy, and SOL, those look crazy to me. Like they are super volatile. So if something were to take off, hopefully they really go. But those are crazy, and I don't know as much about solar, so I don't want to tell you guys that that's going to kill it. So, Andy, can you make a video of new cheetah stocks? I hope you do. Pack the leader. So I've been talking a lot about the stocks I really liked here. I like the ones I've been adding to have been Uranium Royalty Corp. I've added Teuton Resources to EUTF. I think silver could do some crazy stuff, so I'd still like Discovery Silver. I like all of those companies like SM Energy, Centennial Resource Development, SM and CDEV. I like Forsyth Metals, FOSYF. These are all American ticker symbols. ENCUF is Encore Energy, Deep Yellow, DYLLF, Baseload, BSENF. Trying to think, Bannerman, BNNLF. And there's other ones too, Next Gen Energy, NXE. If you guys, NXE is probably the kind of the go-to. That's the one that I think is probably a good risk-reward bet, NXE, for Uranium individual company. And if you guys don't want to play the individual companies like the ETFs, URNM is a good ETF. COPX for copper, REMX for rare earth metals, and TAN for solar, and XLE for oil. So I'll stop it there. We've got about 30 minutes in. Those are kind of my favorite companies and ETFs. And hopefully that, you guys can do some more research into those and the individual companies. All right, guys. I'll talk to you guys later. And thanks for listening. This is Finding Value.